Hello and welcome. This is Elijah on Easy Maths. It's been a long break, and in past videos in this topic of commercial arithmetic, we looked at the concepts on your screen there. This time around we turn to the concept of income tax, which we're going to tackle in two videos. The first one is an introduction and the other one will be an extended example. And so let's begin. Income tax. Now, this normally is or refers to taxes levied on personal income, and it's comparable to the incomes as taxed on products that we buy, which is normally called the VAT, value added tax. Now, as we learn the concept of income tax, we're going to have to first of all familiarize with some concepts. First of which, we're going to look at basic salary, which is normally the salary that is due to employees besides other allowances. Another concept is the concept of taxable income, which is normally the amount of money from which tax is levied, and includes basic salary and all other allowances. Or it can include 15% of basic salary added to, 115% of basic salary minus nominal rent plus all other allowances if the person is housed by the employer. And that means in this case, you're going to have to raise the basic salary by 15%. That's why we have 115%. Minus some amount of money that the employee is paying the employer for staying in their house, some amount we call nominal rent, and then of course we'll add all other allowances that are or could be included there. Next, we have a coined expression, the gross tax, which normally is a tax that an employee should pay, and it's normally obtained from tax tables from the income tax department. Very much closely related to the gross tax is the concept of net tax, which is normally the tax that a worker actually pays. This is the amount that the person should pay, which is gross tax. This amount that the person actually pays, which is net tax. Now, net tax normally is gross tax, this figure here, minus tax relief. Now, tax relief is normally the reduction of the tax burden of from employees. For example, you see, in every country we have some amount that is reduced so that workers do not pay all the tax that they are actually supposed to pay. So that tax burden is reduced by what we call tax relief. We shall see that in an actual example. There's also net income, which is normally the amount of money that is banked on the employee's account. That's the amount that you find in an account. And it includes taxable income minus all deductions. Now, all deductions means net tax plus other deductions. We shall see that again in an actual example. As we focus on questions on income tax, we're going to have to understand some four concepts that I think we should always look out for in every example. The first one is taxable income. You should also be able to identify gross tax, net tax, and lastly, net income. At this point, we turn to an actual example. And so we have this question. A civil servant earns a month salary of 21,200. There's an allowance of 12,000. There are other allowances of 1,100 and 2,000. And we also told the person is entitled to personal relief of 1,240. And so we are given the tax tables, let me call them that, this one here, and we have some questions here. The monthly taxable income, we look for that, and then net tax, which is normally tax, or we call paye, or if you like, pay as you earn. And there's this additional part where we have some deductions. We shall see that as we tackle number C. Moving on to first part A, taxable income. How do we do that? We say taxable income normally is the basic salary plus all other allowances. You see, in this case, we're not told this person is housed by the employer. So we have taxable income computed simply by having the basic, which is 21,200, plus the allowances, which is 12,000, 1,100, and 2,000, which gives us a total of that 6,300. This is the amount of money that the tax department uses to calculate the person's tax that the person should pay. Moving on to net tax, I said that net tax normally is gross tax minus tax relief. And so we first of all have to look at gross tax. I said gross tax normally is calculated from the tax table, and that's what we have here. So we have on this side of the table, we have income in Kenya shillings per month. That means is income from 1 shilling to 8,400, or 8,401 to 18,000, or 18,000 to 30,000, and all the way to above 48,000. Then we have rates in shillings per 20 shillings. That means for a salary that is somewhere between 1 to 8,400, for every 20 shillings, the person is charged 2 shillings. So if we are calculating in the first slab, we're going to have 8,400. You look for the number of 20 shillings there are by dividing that by 20, and then you multiply by 2 to get the tax the person actually pays. So we are looking for how many 20 shillings are there. For every of those, the person is charged 2 shillings, and therefore that figure is going to be 840. The second slab is going to be the same. We're going to ask ourselves, how much income is in this bracket? Obviously, it's going to be 18,000 minus 8,400. That figure, which is 9,600, we divide by 20 to get for the number of 20 shillings there are. For every 20 shilling, the person is charged 3 shillings, and so we multiply that by 3, which gives us 1440. Similarly, on the third slab, look for the income that is in that particular slab, which is 30,000 minus 18,000, that is 12,000, divided by 20 to get the number of 20 shillings. For every 20 shillings, the person is charged 4 shillings, which is this figure here, and gives us 2,400. The fourth slab again is the same thing. We have that 6 minus 30, which is 6,000, divided by 20 times 5, which gives us 1,500. In the next slab there, which is the fifth slab, we're supposed to realize that the tax of this particular person, that's the taxable income, is somewhere between 36,000 and 48,000. So we ask ourselves, how much of that income is in this slab here? How much of the income is in this slab here? That's the question we should ask ourselves. Since it's past 36,000 and it's before or below 48,000. So the only way we can do that is get the taxable income, which is that 6,300, minus the previous slab, which is that 6,000. We get some figure there. We divide by 20 to get the number of 20 shillings there are in that particular tax bracket, or shall I call it slab, and then you multiply by 6 to get the figure as 90. Sorry. Now adding 840, 1440, 2400, 1500, and 90, adding all of that gives us a gross tax, which is 6270 shillings. The person should pay 6,270 shillings every month. But we are told that the person has a tax relief of 1240. Now that means the net tax really will be this figure. That's the amount that he should pay minus the reduction tax burden, which is 5,030. This is the answer for part B, net tax, or pay as you earn, if you like. Moving on to the last part, we told net income, which we said is the amount of money the person finds in their bank account. You see, besides net tax, this person also contributes 250 to NHIF, 120 for service charge, 4,500 for loan repayment, and 18,000 towards savings. So all of these four figures, 250, 120, 4,500, and 1,800, does not go to account. It goes, first of all, the first one to NHIF, the next one to service charge, the next one to loan repayment, the other one to saving. So this reduces this taxable income by some figure, and that tells us that net income therefore is going to be taxable income, this figure, minus all deductions, and all deductions are the 5,030, which is net tax, and then other allowances, which are these ones here. And what is it going to be? It's going to be that 6,300 minus, in brackets, 5030 plus 250 plus 120 plus 4,500 plus 1,800. And so the answer is simply going to be 24,600. This is the amount the person finds in their bank account, and that is the net salary per month. Well, that brings me to the end of the first video. Check out the next one, which is an extension of this, as we look at some more examples. Thank you.